Welcome back to Infinity Podcast. Today I'm joined by Paul Rabinovitch, an impact investing leader whose career spans capital markets, sustainability, and institutional transformation. Paul's journey began far from capital markets, planting nearly a million trees in the Canadian backcountry. That early experience shaped a lifelong commitment to regeneration, resilience, and stewardship. For more than 2 decades, Paul has built and led high-impact investments platforms across the private, nonprofit, and government sectors. He has worked with institutional investors, family offices, and mission-driven capital to structure strategies that prove financial performance and environmental performance are not trade-offs, but mutually reinforcing outcomes. Paul, thank you so much for coming on the podcast. I appreciate it.
It's a pleasure. Great to be with you. Thank you.
Paul, so to get this podcast started, for the individuals listening to us who do not know your background, how you got started, and what impact investing is, could you give us a little bit more leeway, context, and background?
Sure. So I have always been interested in working at the intersection of investments and social outcomes, with a strong belief that, if we investing money and capital, time in projects, can it do more than just produce a financial return? Can it produce sustainability? Can it produce affordability? Can it produce equity? Things that are also valuable and ride along in parallel with the financial returns. And doing so in a way that is also scalable. To me, that's the most exciting place to be, is when you are investing for social outcomes in ways that are attractive and scale up and create greater outcomes, for society. That becomes a really exciting proposition.
Awesome.
And in my career, I've worked in a number of different for-profit, nonprofit, and government positions that have all explored different facets or different corners of those intersections. I've worked on every corner so far. Yeah.
That's amazing, Paul. There's a few questions I'd like to unpack there. First of all, you mentioned you have this passion, that you've always had this passion for impact investing at the intersection of sustainability and impact. How did you develop that passion in the first place? Where did it stem from?
I think it's genetic. My mom has a similar desire. She's worked in affordable housing her whole career, and in architecture. And I followed after her. And now my son, who's 21 and going to Northeastern, and my daughter, who's 19 and going to Vermont, are both interested in environmental policy, environmental science, and in investments. So I guess it runs in the blood.
Yeah.
And, it also has to do with who you've met, in your career and along the way. I had, I think this was always like deep within me, but I had an opportunity early in my career to work at the Nature Conservancy, a nonprofit conservation organization, and meet others, who had similar passions and similar outlooks. And, from them learned about scaling strategies, and from them learned about stewardship, in the larger sense of the word, and long-term horizons and things like that. So
That's amazing. That's amazing. Yeah, I would say in a similar fashion, growing up in a low income household, I mean, we would always like reuse clothes and be very sustainable with how we live. So I would say it also came like from my background and upbringing as to why I'm now diving deep into this whole sustainability movement and regeneration, etc.
yeah, it just makes more sense. You're right.
Yeah, Paul, you mentioned scaling impact. Let's dive more deep into that because it's a question. There's so much. What is it? There's a lot of. It's not as clear when it comes to scaling impact investments across real estate and other sectors. It's still a gray area, and there's investors want clarity, right? So, how can you explain what impact investing is and how it's able to be scaled across these different asset classes?
Sure. So, well, impact investing, as I described earlier, is investing capital with a double, let's call it a double bottom line return, and an intention to achieve a double bottom line return. And in order for it to be what I would call a valid impact investment. There's an intention that you're going to get a social outcome and a financial outcome. There is a component called additionality, which is very important to impact investing, which means that your dollars are going to trigger outcomes that wouldn't have happened without your dollars there. It's not as if, so for example, if you bought an affordable housing project that already had 30% affordable and you kept it at 30% affordable, you're not necessarily making an impact investment. It's debatable. If you made it 50% affordable, increased the affordability by by an additional 20%, then you're creating additional new affordability and creating impact. And the last part is measurement, right? We need to be able to measure what we're doing. And I think, so those are the three critical components of impact investing. And I'd say, there is a broad spectrum of impact investors and impact investment capital in the market. And it runs from concessionary capital, where they're just looking for a return of capital and maybe a 1% return, to pure market rate. And I think that's what makes impact investing so interesting and definitely differentiated from whatever you might call it, conventional market-based investing, is that you have these different sleeves of capital that might be willing to go to places that are not, the highest return, in order to achieve perhaps the highest social impact or the highest trajectory for scale and so forth. So I think you find that across every potential investment sector in, either equity or debt or guarantees, and whether it's real estate or private markets or public markets, there is a wide spectrum of return horizons that people can talk about. And it depends on what they're investing from. If it's a foundation with an endowment investment, to a family office, to just an individual, everybody has different needs. Most of my career, to be honest about it, has been impact investing in order to get as close to a market rate return as possible. Most of the capital that I've worked with has a conviction that in order to move more capital in your direction, you need to prove that you can get an equal-ish return to doing, a conventional investment.
Well, Paul, I want to dive into that last point when it comes to impact investing in real estate specifically. Would you say that these returns can be on par or even better than regular market rate returns when it comes to sustainability strategies within the real estate sector? Or does it fully depend on product type, geography, asset class, etc.?
Yeah, it's a great question. From a like 5,000 foot perspective, my answer would be yes, that they can be competitive. What I'd say in terms of sustainability investments in real estate is that it's very hard for a sustainable real estate investment with a 5-year investment horizon to compete, with a 5-year horizon conventional investment, just because you are normally putting in a little bit more extra money up front in order to build a better product, frankly, a more efficient product, and it takes a longer time to amortize your upfront investment. What I am saying, though, is if you start to look at an 8 to 10 year horizon, completely competitive, perhaps even a better investment over an 8 to 10 year horizon, if you are building a high performing, highly sustainable real estate product that you plan to hold long term. So, in a way, it's old school return to our roots real estate, where you are building real estate products that are built to last and built to have long-term good quality. Let's call it that. I think what we've seen over the last 30, 40 years is the commoditization of real estate and the private equity model of let's build it quickly, fill it quickly, sell it quickly. And in doing that, you can drive a higher IRR, but you can't drive a great quality of product, and you can't drive, honestly, a product that's going to stand the test of time as well as some of the things that we've been building.
Exactly. Even though I think in the private equity model, you're going to get the higher IRR, like you mentioned, you're not going to be leaving the impact with regards to your residents, your customers, and what impact investing is actually all about.
Yeah.
So, yeah, that's a great point. What are some of the strongest arguments today that you see for investing in decarbonized real estate, sustainable real estate?
Yeah. Well, we had a really strong argument when we had the Inflation Reduction Act, and that was taken away from us by the current administration. Um, Even without that, though, I mean, and that was, I honestly think that was sort of like extra wind in our sails. But the fundamental secular shift, the fundamental dynamics of a changing environment still creates very valuable risk mitigation and value enhancement for building uh, a high performing sustainable real estate asset. And so right now, the two places, or some of the places that I look at and point to is climate change and the effect that climate change has on our insurance rates, and rising insurance cost, the effect that climate change has on our energy cost, and how much it costs to provide energy for a building from conventional sources. So both of those are arguing towards resilient locations, resilient construction, as well as sustainable construction, where you're harvesting free energy from the sun or from the ground, and using that as a buffer, as protection against energy costs that just keep going higher. I mean, forget about the Iran war for right now. Energy costs have just been tracking higher and higher year over year, every single year, and it's biting into what your NOI looks like. So I would say that those two aspects are really strong. The third is, there has been a debate, and there continues to be a debate in this country, less so in Europe, about whether a green premium exists, right? So a green premium means that if you have two buildings on the market, one is a high performing sustainable product, the other is a conventional product, does the green product get a premium? Is someone going to pay more rent for that property to rent it, or is someone going to pay more for it to buy it in the market when it's going for disposition? So there just isn't enough data in this country right now for me to postulate, yes, there's definitely a green premium. I can point to it. I can point to it in Europe, and it exists. It doesn't really exist here. But I would share two things. One is, and this is really my experience and the experience of other people I've interviewed and other people that I know in my network, is that the green product will always rent faster. There's more absorption. Is that it's sort of like, if you think about it in like a Whole Foods kind of way, is that people are now recognizing what an organic label looks like, or a green label looks like, and are saying, no, yeah, I think it's better for my health. I think it's better for the world if I take the organic product, the green product, and I'm willing to pay a little premium to be in that. So they may or may not pay the premium. They may say, no, I'm paying the same price, but they will always choose it if it's the same price. So your absorption of that building is much faster. And I've noticed that. Then on the disposition side, what we're seeing in our country now is we are seeing a ground up conversion to more sustainable practices. What I mean by ground up is that municipality by municipality, we are seeing more and more building performance standards created. These are overlays on top of your zoning that regulate what your building emissions can be. Put a cap on it. If you go above the cap, then you pay a penalty fee or a tax, whatever you might call it. So that has relevance to what you can charge when you are going to exit the building. If your building is high performing, if your building is nowhere near one of those caps that exist, then the purchaser who's coming in, just as an investor, not doesn't matter how they think about the world in terms of sustainability or their ethics. They're just going to say, well, this one has a stronger NOI profile over my term of hold because it's not going to get taxed. It's so versus this one where it could get taxed in 3 years. I'm going to have to modify my boilers. I'm going to have to change the windows. So therefore, I'm going to put a brown discount on that. So that is another, I think, driver of change is the building performance standards. I don't remember how many there are in the country right now. There's getting close to a couple, definitely over a dozen, maybe 20 or so right now that are on the books. A big set of others that are coming on. And as I said, mostly cities, municipalities, some counties, and a couple of states. This is in contrast to the European model where the central government has said, no, we're doing it this way. Everybody get in line, and they do top down.
Yeah.
U.S. is doing it a different way, a little more patchwork.
Yeah, definitely. Paul, right now, artificial intelligence is the buzzword and everybody's talking about it. Can you explain the role of AI when it comes to decarbonization and net zero?
Yeah. A few different use cases that I think are really interesting. And I would say I'm not necessarily an AI expert. Read about it a lot, come up to speed as much as I can, attended a couple like webinar things to learn more about it, but learning like lots of other people.
Yeah.
I think that a great use case for AI is going back to resilience. And there are lots of tried and true ways in which real estate investors do market analysis, sift through tons of data to figure out job growth and migration patterns and all that kind of stuff. And AI is great for that. But the other data that can be incorporated into that is resilience and understanding what the patterns are of repetitive loss from flooding or fire or hurricanes, any of these things that are climate driven. So I think there's a great use case for AI producing more accurate, better understanding of where our climate risk lies, right? I've called climate risk like the greatest unpriced risk that we have in real estate right now, where a lot of I would say the majority of the market, maybe 90% of the market maybe 95% pays no attention to it, right? And so investing, if I told you there's this giant risk that could take out your investment and you don't pay attention to it, you would probably, right? Like you'd lose your shirt. Like, what?
Yeah.
Now, come on. But it's true, right? I mean, it's totally true. So that's one. There are a ton of really interesting AI models that I've seen that work with different interventions in a building, right? So you take a building, you can put your data in about the building into the models. This is how big it is. This is when it was built. This is what kind of roof we have, and here's what my meter says. And then you ask these AI models, and there's a couple commercial applications for this. What is the best return on investment for investing in sustainability in this building? And then rather than spending $10,000 on an energy modeler come in and having, all these different professionals come in and look at it spits out an answer like that. It still needs, some refinement, but it gives you a really good directional approach of forget about the roof, work on the windows. Forget about the roof and the windows, work on the boiler, right? Yeah. Like it tells you where to go, and it will tell you also where your best return is. So what the sweet spot that you want to try to get to is, how do I get the most improvement in EUI, energy use intensity, per dollar spent, right? So every dollar that I'm spending is bringing down the energy use intensity. That's what you're trying to figure out so you can be as efficient as possible about putting renovation money into a building.
Exactly.
Great.
Yeah.
Those are really great models, and there's, like I said, there's a two or three different models out there, commercial applications that you could sign up and they'll run through it for you. Yeah.
I think it's really interesting because AI is moving so fast, and its role in innovation and getting to net zero is obviously something that's going to be helping us a lot as we transition more towards the green economy in the coming years.
Yep. Yep.
Yeah. Paul, talk to us a little bit about the prop tech innovations that you're seeing in the space, specifically across the built environment, like green concrete or new types of steel, cross-laminated timber, etc. Like, what are you seeing at the forefront right now?
All of those things I am seeing, and they continue to evolve. And, I think they are all coming up at the same time. There's, like, as you just said, supplementing your. So wait, let me back up a second. If the real estate industry is going to solve two things that really changes the trajectory of our climate emissions, it's steel and concrete, right? Like,
Yeah.
so if I could take all the brain power of all the prop tech industry and, if I had that like magic power, I'd say just focus on those two things. And like, we can worry about windows later. We can worry about LED lights later. We can worry on, CLT later.
Yeah.
Like those two things, we solve them. We've got like a massive amount of improvement in the built environment. So that said,
Yeah.
I see a lot of different emerging approaches to concrete, to steel, additional CLT products that are coming out, as well as different products that are like CLT, like different approaches to CLT that have different properties and are built in factories in a different way, using different polymers and epoxies and so forth. I'd say that the last part I'd say is just the modular approach to construction and 3D
Mm.
printing. Those two are also really growing apace. So there's modular approaches that stack. There's modular approaches that come as mods, and there's modular that is using CLT as part of their mods.
Wow.
And I include with that panelized factories that produce panels that then go together, right? With everything is inside of a wall unit, a wall assembly. All of those are growing rapidly. All of those approaches, and then the 3D printing, I think, is really interesting and really exciting. Right now, I've only really seen the use case for single family homes, but that's okay. That's like 70% of our built environment here in the
Yeah.
US is single family homes. So if they have a better way that's that's more high performing than traditional sticks and bricks, then let's go.
Paul, we're seeing now that the UK and the US are like at the forefront of, well, I would say Asia as well, at the forefront of ESG and this whole impact investing movement. I come from Latin America, and I wanted to ask you, how can we, like as an industry, also propel this whole green building movement towards Latin America, Argentina, Mexico, where I would say it's kind of a laggard sector in some aspects?
Yeah, that's a great question. I think that one thing that I've seen has been some countries, and I'll call out Sweden and the Scandinavian countries. As Sweden has the GTI, Green Transformation Initiative. I don't know exactly what it stands for, but GTI Sweden is sponsored by Sweden. You can look it up. And basically what it does is they aggregate all of the leading technologies that are being created in the Nordic countries. So it's not just Sweden. And they try to export it. So there's a GTI, in all different places that basically goes to the development community and goes to municipalities and say, hey, we have all these great, Nordic technologies about geothermal loops and district heating cooling plants through geothermal, CLT processes, CLT factories. Let us export that to you. We'll even finance it for you in some cases. if you'll pick it up, right? Like, let's be an exporter of our knowledge. So I think, like, for your question, it would be wonderful to have like an expansion of those kind of. I think there's a lot of great ideas in Europe. There's some great ideas in Asia, but they don't export so often, which is a shame. Is we're not learning from each other as well as we could and should,
Yeah.
and therefore not going as fast. And there's there's a number of different products out there that I'm like, oh, okay, yeah, I've read that before. Oh, Israel's doing that too. Oh, look, Sweden's doing the same thing. Like, they're all doing the same thing in different countries, right? We don't know about each other. So that, I think, having some way of capturing that and then channeling it to places that are growing more slowly would be a solution. It's
Yeah. Yeah.
I would also
I think,
say, I just want to make this point. I've written about it a couple times, is that the transition to being a sustainable, high performing developer has much, much less to do about your use of technology than most people think. It's not about having great technology. It's about being very, very clear with your integrated construction team, and it has to be integrated. Your architects, engineers, general contractors, subcontractors, HVAC contractors, and engineers, that you are intentional about creating a high performing building, and you will not accept a conventional building and kind of pushing against them. It's more of a mindset than a
yeah.
than a product that you buy off of the shelf, right? Like, it's not. More people think it's about having some great technology. It really isn't. You can build. We have everything we need right now to build everything as high performing and sustainable, right? Installation is cheap. Using AI to create more efficient buildings, and minimizing our need for greater HVAC systems is brain power. It's not expensive, right? So that's like a major point that I make over and over again to interviews, and
Yeah.
when builders ask me how you do it, I'm like, you got to get your team to all think the same way.
Yeah, that's awesome. That's an interesting point that I had not thought about. And would you also say that family offices and capital also think the same way when they reject your regular commodity style apartment building and regular delivery methods and push towards the green sustainable building methods, etc.
Yeah, sometimes the family offices, all family offices are different, so it's hard to generalize. Every one of them is like a snowflake. Um, but that said, many of them are long-term investors and think about long-term, meaning like, we're never
Yeah,
selling.
yeah,
Old school real
yeah,
estate, like, this will be for our grandkids, generations from now, multi-generational investments. So when you start to think about it in that terms, then what I was talking about earlier about quality buildings that perform well over decades becomes more important than a short-term IRR. So family offices, whether or not they are necessarily driven by a sustainability mandate, are interested in these dynamics where they can do both, a good thing for the environment as well as generate. It's less about an IRR and it's more about a strong equity multiple. They're like, oh, wow, if we can get to our 2.0 return on multiple on equity, or a 3.2.5, 3.0, let's do that.
yeah, yeah. Where do you see the future of the built environment within the next 5 to 10 years?
Yeah, interesting question. Well, I think we're going to continue to see more and more uh, more and more advances in the building technologies and building approaches and so forth. I think that's going to continue. There's a lot of money that's been invested in these companies to grow, and they are growing, and they're coming up with new approaches. I think we're going to see an increasing amount of insurance burden and energy burden, and I think that we are going to see more interest in resilient locations, and, dare I say it, maybe a retreat from the shore. Like, speaking of unpriced risk, like, if you are buying waterfront Miami, waterfront New York City, lower Manhattan, I mean, your risk, it's almost a certain flood,
Yeah.
almost certain,
Yeah.
right? And I know a couple of institutional real estate investors who've walked away from places like that, after investing millions and millions in diligence and earnest money and all that kind of stuff, have said, our models are saying 65% chance that there's going to be a loss here. We don't want to do it. We're out. So I think that's going to change over the next. It's going to be accelerating. It's hard for me, anyone, I think, to put timeframes on it, because with climate change, all of these are trends that I know are going to take effect over the next 50 years. But whether we find it acute in year 5 or year 10, very hard to predict, right?
Yeah.
There's that's way too complex to be able to predict when exactly and where exactly. Just that there will be this slow moving trend. And then within the slow moving trend, there'll be these huge spikes, where there's like this crazy winter or a crazy storm or what have you. Like,
Exactly.
just ask Asheville last year, like, did they think that they were going to get flooded? And of course not, right?
No.
That was in nobody's model.
Right. What can the industry do in today's day and age to collaborate on these issues that we're facing, mainly pertaining to climate change? I always talk about forced collaboration and how the public and the private sector, and even at the city level, the sector level, and the asset level, they all have to come together in one cohesive unit and, just propel this movement forward. But what do you think are some strategies that we can do today to push this movement?
Yeah, I know, it's popular to be kind of kumbaya and say we should all get together and talk about it, and we should, all convince each other of the rightness and propriety and smartness of being sustainable. I would say two big things that, if they changed, would make massive difference. Number one is government, right? Like I said about building performance standards and municipal government regulations, like if we had regulations in place nationwide, or even if this continues, the BPS trend continues and it covers a larger part of the country, that is going to change the dynamics of the conversation. Is because once the regulation's in place and there's a certainty of a tax or a fee, then behavior changes. So regulation is a major lever. The other major lever that I'd say is finance and capital markets. Is if banks and insurance companies kind of come to the conclusion that investing in conventional buildings is a loser. We are all, as developers and investors of expensive assets and products, tied to the capital markets, right? We can't do our work without them. So if the capital markets are tilting in a certain direction, the market, that we just go along with them. And you have to. You don't have a choice. Yeah.
What do you think is required for the capital markets side to change and truly understand the benefits of investing in sustainable products?
Yeah, I think it's going in that direction. It's more data, continuing to build the data and the use case, and like, yes, this is dry, yes, this is more resilient. Yes, this is more risk resilient. Yes, this is driving a better NOI. Those kind of things. I don't think it's proven out yet to everyone's satisfactions, either investors of either equity or debt yet, that this is a thing. It is the case in Europe. I think that's been well proven. I think Canada is ahead of the US in terms of debt markets and equity markets, understanding that dynamic. Canada is definitely ahead of us in terms of capital markets appreciating the green attributes. We're getting there, just slowly.
Yeah. Paul, for my last question, for emerging managers, developers, and anyone who's interested in this sustainability movement, what would you advise them? What should their focus be on within, obviously, this next cycle that we're going to be facing here in real estate, but even beyond real estate, just as it relates to climate as a whole?
Well, I mean, I'm, as you may have surmised from the last half an hour or so, I've drank the Kool-Aid. I am firmly convinced that we are facing, a trend over the next 25, 50 years that is going to really affect our assets, our communities, the way in which we work due to climate change, energy prices, insurance, and other aspects that, change the dynamics of our investing. So because I have accepted that deeply within myself and said that is the way that this is going to be, I have also then made the shift of, therefore, I am only going to be building in this way so that every product that I produce is going to look this way. And I need to align myself with the right team that is working in that direction. So to your question is, what would I be doing if I were advising the next generation? I say look to build your team, right? Find your thought partners, find the sources of information that are going to come in and inform your mindset. Find your development team, architects, engineers, builders. Find your data sources that are going to tell you about new products. Like, become smart about that. Is like the best developers, the best investors have built teams that are mutually reinforcing and integrated, and give them pipeline, give them product flow, give them better designs, what have you. If you want to be doing this to be in alignment with a high performing sustainable building, you need that team. You can't just do it on your own. Build the team. Yeah.
Awesome.
Yeah.
Paul, where can people find out more about you and the work that you do with your company?
Go to LinkedIn. LinkedIn, Paul Rabinovitch is probably the best source for right now. I'm working on a website, should be out soon. It'll have some of my published materials, some podcasts like this one, other things of that nature, but it's still a work in process. So for now, go to LinkedIn. When the website's ready, I'll put that up on LinkedIn, and you can get to the website from there.
Awesome,
Thank
Paul.
you.
Well, I appreciate your time. Thank you.
Absolutely. Thank you. It's been a pleasure. Take care.